Good morning, traders. Paul here with GammaEdge. Today is Friday, the 10th of February. Let's get started. Pause your players here. Read to the bottom. If you agree, hit that play button. Overall, our market models are turning bearish. We're in day 2 of what we call a short-term downside continuation. It's where the CT is pointing down. It's closed lower on 2 consecutive days. We use this signal on a daily or intraday signal basis. A lot of the 0DTE folks watch this, so just be aware, short-term downside. Longer term, both of the cumulative tick, what we call the ribbon slopes, are negative. You'll see that here coming up. We are mindful of a short-term upside reversal. When we move down rapidly, we tend to get a dead cat bounce, and we're not ruling that out here. That being said, if you are a longer-term player, we are increasing our short-term exposure and looking to play some of the 2x leverage ETFs to do this. Market breadth still remains on a bullish side. We've got 26 days of upside expansion, really since the beginning of the year. It's pretty weak. I'm not going to show a slide of that today, but come on into the Discord and we're happy to walk you through that. The right goalpost, which is positive gamma exposure, remains at 4,200, but you'll see in the last slide here that the left goalpost, minus GEX, the right goalpost could go up to 43, getting twisted around my tongue there. And on the downside, that left goalpost could become 39 or 4,000. It's a tight battle, and what really determines this and what you need to be watching for are the quarter and half levels between 42 and 43. Specifically, if the call speculators come out in force, we could see a growth of the 43 line. We're not expecting that, but it could happen. And to the downside, if you see the put speculators come out in force and stack on 39 or the 4,000 strike, we could see this move up. You can tell where the short-term bearish and bullish would be based upon that. For the 0DTE crowd, downside 40-50 could be an area where we think we could get some long exposure to the upside. And if we do drop to the 4,000, we don't think we're going much below, say, 40-10, somewhere in that zone. So if we do move into that area, you've got a good reference point at 4,000 and would be looking for that to hold. You could probably play some upside off of those lower levels. We do think that if we reclaim the 4,100 strike, we think first target will be 4,150, right in that zone, and we don't think we're going to get any higher today than 4,190, best case, so we would be fading that as appropriate. The overall takeaway is this: we're transitioning. The easy money of the last couple weeks, 2023, is gone as far as we're concerned. Above us, the call speculators are failing. They are not adding the calls as necessary. Below us, we are seeing those puts go in, and the rest of today's presentation will show you this. As I said, the market model using our cumulative tick indicator, we broke through the bottom of the ribbon yesterday, and when that occurs, that's going to turn both slopes. So the first time that happened a few days ago, was a warning sign. We failed to recover, and now we're going to be pulling both of these down. When we get that type of indication, that is a opportunity to start increasing your long exposure. We do not get large on this first entry because you may see reversal up as the market goes through its fits and spurts. But we could continue down, or we could see some sort of intraday reversal up and retake this. We do have a situation where we could go either way. Taking a look at the key levels here, SPX PM-Settled over here on the left, the Combo over here on the right. Combo is unchanged, strong delta levels still. That, as you can see, expected move is what it is. Over here on the PM-Settled, though, and the PMs are what are tradable, right? I mean, that's your dailies and everything. What we're seeing is we saw a drop from 42 to 41.50 on plus GEX, and we also saw a drop from 40.65, which is the JPM short call strike for the end of March, drop down to 40.50. When we see plus GEX and minus GEX in the PM complex drop, that's general weakness. The other thing that we're seeing here too is we're starting to see the deltas start to flip to the put dominated side, and when we see that, the calls are losing the battle. They're coming out of the complex, and hence we start turning red. So just be aware of that in general. Taking a look at the PM complex, so the yellow line is the closing spot yesterday. You can see above here that the OTM call structure, even though we've got a lot of greens up here, so still have some speculation to the deep upside or far upside. What we're seeing right now closer in is that a lot of the short-term calls have been removed, and that exposes the in-the-money puts that are present here. So we need the bulls to step up and add speculative calls here to really start building this upward again. We'll see what happens. Below us, where we have the in-the-money calls, you can start seeing in the PM complex where the puts are starting to dominate. These are speculative OTM puts, and when you're out of the money, they're starting to really dominate what's in the money in terms of the call structure. So this is a little worrisome for the bulls. It's emboldening the bears, and want to certainly pay attention to this. Just note, today we have 27% of the SPX PM-Settled Complex in terms of gamma coming out. That money has to go somewhere. So when 25% of roughly about 4 million contracts is vaporizing, be aware of it. It's going to potentially move the markets. When we take a look at the 0 DTE, kind of that same analysis style here. We've got overhead, we've got a lot of puts. These are all in the money. They're coming off the table today. So that could open the door for a potential to move up. We'll see what happens. To the downside, you can see where the in-the-money calls are, and you can see that the out of the money puts right here that are coming off. As we go through the day, the deltas across the right now line are going to be accentuated, especially into the close or into the latter part of today, and that could set up a real contention here. So we'll want to pay attention to this. As puts come off, that actually can be fuel to an upside. But if it emboldens folks to get positioned for the weekend, we could actually see a move down. We don't think we're getting much more lower than 4010, 4005 zone, and we do think that 4000 strike is relatively safe, at least from the contributions from the 0 DTE today. Taking a look into next week, not really liking what we're seeing here. So Monday's a big expiry. 35% of the gamma in the complex for next week's coming off. We've got this large transition range, ill-defined. You can see it's messy. Hard to really tease a lot out of this. When we are in the transition zone, especially on the look ahead for the following week, it could be noisy up and down. And this is in context of both the gamma side as well as the delta side. So we're not seeing a lot. I will note the 4,000 strike is dominant next week. That's a big deal. So is 4150. So those really define the two goalposts or the two boundaries for next week, and we'll want to pay attention to that. If we do lose that 4,000 strike, we do see 3950 opening up and potentially making a run for that as the bears get more accentuated here. Taking a look at the combo complex, which is the AM and the PMs all combined together. This 4065 is the JPM end of March roll. These are short calls, not liquid, but very present. They have a delta influence and they have a gamma influence. You can see where we are right here in context of the overall transition. 4095, 4100 is real key for the combo complex. Above, the structure just is not conducive to a rapid move up. But if that changes, if the 0 DTEs come out in force and rebuild this path, you can see well overhead, well out of the money overhead. We've still got a lot of calls sitting up there. They are dominant, more dominant than the in-the-money puts that are sitting up there. And you can see that here just in the open interest. And the real key here, I think, to take away is that we haven't lost it, but it's very weak above us. So the call buyers need to come out. They need to get engaged here. We're in the last throes of them being able to do that. If they don't do that, I think we're in trouble. To the downside, call structure is really solid. You can see that here visually. It's solid magnitude. We like what we see down here, actually. We don't think we're going to have a rapid drop below that JPM strike. But again, here's that 4,000, here's the 39.50, and you can see they're very dominant. So if in the overall complex, we're just going to have to wait and see what happens here. But we think we're fairly stable as we push into this. It's going to be difficult to rapidly sell off. That'll give us some idea of what's going to happen here at the 4,000 strike if we do lose this downside. So we are looking today to hold and spend most of our time above 40.60 and see if we can rebuild this area up here above the 40.80 where we are right now. We'll just have to wait and see what happens. Lastly, I think this is the best slide for just kind of getting a snapshot of where we are. 3,800, 39. 4,000 all showing up here on the negative side. You can see in magnitudes they're all very, very close, and this is why I said at the opening we could actually bounce depending on what the put speculators do. In short-term gamma, you will really drive where minus Gex sits at. Same thing on the upside. We have plus Gex here at 42. Here's the 43 line. You can see they're almost virtually the same. When we have a setup like this, we could easily bump up if the call holders or call speculators become emboldened here. Don't know if that's going to happen. We are below transition, and you can see I've been talking about this for weeks now. We've had a really crappy transition going into this, and now you can see that it's pretty solid. Very clean. When we get a clean transition like this, there is no ambiguity. We know where the line is that we have to take, and that line is 4,100. So 4,100, we will think that the upside speculation is possible. If we can't retake 4,100, you can see the structure is very clean, but we could use that as or see that as a reference to the downside. So play it accordingly. We're more on the selling side, possibly with a short-term bounce. We would need to see a close above 4,100 in order to aggressively start looking at reclaiming 42 or 43. So with that, I bid you farewell. Make it a great Friday. Hope to see everyone in the Discord. To get there, go to GammaEdge.us. In the upper right-hand corner, click on that pricing tab, fill out the blanks, 14-day free trial, all the tools turned on. We're getting ready to introduce some new charts also, which I think will be very, very interesting. Delta and charm charts, which are eye-opening. Follow us on Twitter, GammaEdges with an S, and here on YouTube, of course, two things. If you like today's content, smash that like button. Gives me immediate feedback that I'm providing the content that you want to see. And then, of course, follow us or subscribe because Michael, Taylor, and myself are posting videos, and we want you to see what we're seeing. So with that, make it a great weekend. Hope to see you in the Discord. Come on in, join, and we'll go from there. Take care, everyone.